Hey, good afternoon, everybody. Welcome to today's episode of Hooked on Mortgages. We got a special guest today, Leandro Perez de Gracia.
Thank you for having me.
Um, Leandro is a CPA with TP Group, which you just founded. So congratulations
Thank
on
you.
your on the new business venture. Just to kind of get everything started. Why don't you go ahead and talk to us about how you got into being a CPA and kind of your prior line of work, and take it from there.
Yeah, I actually started my early career was actually in this industry. Straight out of high school, I got in mortgages. Just out of high school, I got a job at a mortgage company. It was a secondary loan company that we'd finance the closings, and then they would sell the loans to Fannie Mae and Wells Fargo, and I took it from there. And I thought I was going to be in the mortgage industry for the rest of my life. I really loved it. And the Great Recession of 2008 came, and my revenue went from really high to nothing. And it was kind of tough dealing with the ups and downs of not having the steady income. And I gotta look at another industry that would be a consistent revenue stream for me. And I saw that being a CPA would always have a good foundation for like business, and you can get work anywhere. So I had options to go to public, private, and even government. So I chose that route. I always love real estate. My heart's in real estate, but I really love what I'm doing now as a CPA.
Well, you're always welcome back to the dark side. Don't worry.
Yeah.
All right, just to kind of keep going on to the CPA stuff. So obviously, we can start kind of getting an idea of what exactly it is you do for your clients. So to a layman or to someone, some of these kids coming fresh out of college, what would be the reasoning, or what are some of the services you offer that most individuals, if they were going to file their taxes, couldn't do or probably shouldn't do?
Right. As a public accountant, dealing in public accounting, meaning being in a CPA function, there are two areas. Most CPAs either choose the tax and accounting route, or there's also the area of audit. So there's some CPAs that only do audits, and what that means is that they go out and audit entities because they maybe have a big loan with a bank or their shareholders require it. What I do is more of the tax and accounting side, and that means is tax compliance, making sure we file the income tax returns on time, preparation of individual, business, estate, and trust returns. We do accounting for clients if they need that, and as well, we do a lot of consulting. So clients are dealing with a transaction where they're going to sell a business, or they're looking to retire, or they're looking for a succession plan, or pass on assets to their family members as they're aging and they've created all this wealth. That's our area of expertise. And also we deal with domestic clients, and we also have a lot of international clients. And international is when you have foreigners investing in the U.S., or when you have U.S. persons that are doing business outside of the U.S. So there could be international components as well. And that has a lot of tax implications and tax filing requirements.
Okay. Is there any particular industry that you specialize in, or or I know you said obviously real estate, your heart's in real estate, but is there anything that any particular that you specialize in? I'm sure there's a broad spectrum.
So I don't specialize in one area. I mean, I'm kind of like jack of all trades. I always had the idea that my clients, they're not going to have one problem. They're going to have a million problems, right? And they're going to be all walks of life. So I have a lot of clients that are, individual real estate investors. And then I have the big groups. I've had clients that have $70 million rental properties with investor groups. And how do we structure that, right? I have clients that are in the waste management business and the shredding business. I have clients that have car dealerships. I have a lot of attorneys. So we service all kinds of clients. We just don't deal with one area. And it's fun because you get to learn all these different trades and how these people earn their money, and it's interesting to kind of work with them and help them maximize what they can earn.
Okay. Also, obviously, this being real estate podcast, I guess we can make this two questions, but I'll let you answer them both together. Obviously, a 1031 exchange is something that is very familiar to especially real estate investors in this, in this world. So I just wanted to kind of, I guess if you would give a layman's kind of a breakdown of how that works, and also just in general, real estate, the again general benefits that people can take advantage of buying and selling real estate, whether they're buying, selling, or they're renting them out.
Yeah, so with the 1031 exchange, what that is, the 1031 is a code section of the Internal Revenue Codes. So it's basically a law that what it does, it allows you to take advantage of the equity you have on a property. And let's say you bought a house for $100,000 and now it's worth 500, and you want to purchase a new property, but you don't want to pay the tax. So the idea of the 1031 is that you get to defer the gain. So if you sell your property and you do a 1031 exchange, you get to use all the funds from those proceeds, and it won't be wasted on paying, the tax. So you'd have the full portion of the gain to reinvest in another property. And the intention is so that people reinvest in real estate and continue to grow their investments. And the way it works is you can't receive any of the money from the transaction. You got to put it in a 1031 escrow with a qualified escrow agent. And you have 45 days from the time that you sell your property to identify the replacement property. And you have another 180 days, and the 45 and the 180 run together, but you have 180 days to finish the transaction, meaning you sell your property, you identify a property within 45 days to replace it, and then you sell or you close on the new property within 180 days from the date you sold. Okay, and with that you get to really save on paying the tax until you finally sell the second property and you decide to cash out and take the money. If you do receive a portion of the money from the transaction, that's called the boot, and that would be subject to tax. Now, some of the things that we do with our clients that do real estate is there's a thing called cost segregation studies. So we have a lot of investors who buy, commercial buildings or apartment complex where there's 10 to 15 units, and these properties can range from $1 million to 10. I actually had a client buy a $70 million rental community. And we did a cost seg study. We don't prepare that, but there's plenty of companies that do that, where they bring the engineers, they look at the overall structure of the property, and what they do is that they break down the components of the real estate. So when you buy a property, you buy it for $10 million. Let's say there's a high purchase, and usually most people, what they will do is capitalize it and depreciate it over 27.5 years if it's residential, or 39 years if it's commercial. But when you do a cost seg study, it breaks down, different assets like the doors and the light fixtures and certain assets that are depreciated at a better or quicker rate, meaning 5-year, 7-year, 15-year property. And with that, we have what's called bonus depreciation, or Section 179, where you can take 100% deduction. So if you buy a $70 million property and you get a $10 million depreciation in the first year, you're not going to be paying taxes on that, activity for a long time. So that's like one of the biggest things that a lot of the investors or real estate people investing in real estate don't know about.
Wow, sounds simple. I'm just kidding. But just like, I guess what a lot of people, I guess, don't do and probably shouldn't do is, I'd like to kind of get an idea. Obviously, your services are always needed, but for the person that's trying to save the penny, pinch a penny, or whatever the case is, what's some of the mistakes that you see the general public make when it comes to filing their own taxes, and then what are possibly some of the repercussions that may come from that?
Yeah, I would say the biggest mistake is if you're gonna do a transaction, or there's something going on, the first thing is you should always consult with a CPA. You may be selling a business, or you may be selling your home, or you may be doing a loan, and sometimes it's more costly to tell us about it after the fact and say, hey, we could have done it a different way, and you would have saved a lot of money. So when I have a client call me and it's a 15-minute conversation, I don't usually charge them for a 15-minute conversation. I don't think that's fair or that adds value. So I want them to call me and let's discuss it. If I tell them, hey, this is going to require some research or additional work, this is what the fee would be, but they need to see the value of dealing with a professional that's going to guide them and give them, the right advice. And then another part of, there's a lot of people that want to do their taxes, and it's great, but it's like I tell everybody is, when you have a legal matter, you're not going to go to court and deal it with on your own. You usually hire an attorney. He's a professional. He knows his way around the law and the process. And it's the same thing with a CPA. We know the way around the tax returns and the tax laws, and we try to, take the best benefit we can for you, but also we're going to properly present your taxes, meaning that we're not going to miss the depreciation or capitalizing certain expenses when you have to depreciate it instead of taking the expense. There are certain rules, like when you have repairs, that depending on the amount of the cost of the repair, you can't deduct it under law. You got to depreciate it. So we look at all that. We understand those rules. And, it's usually costly when you get caught with an audit and all these issues come up. Then you have to hire the CPA to represent you. And it's going to be a lot more money.
Yeah, no, that's probably the same thing in our industry of people who either are selling a property and they don't want to pay the realtor, or you want to go to your Joe Schmo, or you just got your real estate, you got your NMLS license, or you went to a family member who just got their NMLS license, and all of a sudden I'll get a phone call a couple weeks later after talking to that client initially, and you got to come and save the day, and it might have saved them money, might have not, but it's kind of basically the same situation. But obviously, going into the mistakes people make, I love to hear stories. So, do you have any horror stories that stick out? I mean, I'm sure you have quite a few being in the industry as long as you have, but just the one that every time it haunts your dreams, or whatever the gear. It's the first thing that comes to mind.
Yeah, look, I've seen a lot of stuff. The one that stuck to me to this day is a client who moved to the Cayman Islands, and he did very well. And one day, the Cayman Islands signed an agreement with the U.S. to share information of persons living in the island. And the U.S. government found my client and started investigating because he was obviously made a lot of wealth. But that was a representative of what was being filed in the U.S. And unfortunately, sometimes it's important that you know who you're working with and kind of build a relationship with the attorneys or CPAs you're working with, because unfortunately for this guy, he intended to do right, but his tax advisor at the time didn't guide him in the right way, and there was a lot of missed information that wasn't properly reported on his tax returns, and so it became a criminal matter. I flew out to the Caymans twice. I've worked with attorneys on this thing. Thankfully, we were able to prove there wasn't any criminal intent, but it was a civil matter, and it did cost them a few $1 million to resolve. It's actually still ongoing. It's been ongoing for about 6 years, but overall, I think we had great success that he's not behind bars.
Yeah, I think most people would trade for that. So just kind of get into for the everyday person, what would be your suggestion? Obviously, someone either starting a business or maybe starting a family, you're looking to start making some large financial decisions. What would be your best advice to start working with you? Whether it's buying a home or starting a business, what would be your best advice for that?
Look, for people starting out, I think buying a home is the best asset you can buy. That's the first asset, and that should be your best asset. And personally, because historically, real estate has always appreciated. Yes, we had the great dip in the 2008, but after that, look how the real estate economy has bounced back. I mean, it's and it keeps getting harder for everybody. So I tell everybody, hey, don't worry about the shiny car. That's only a depreciating asset. Buy an appreciating asset. And I always tell people, save for your home. Save for your new home. It doesn't have to be the biggest one. Could be a condo, could be a townhouse. But to me, that's the first big asset or big purchase they should do. Business owners, it's hard at the beginning, but I always say talk to a CPA. You know, it's you can really get yourself into trouble thinking you're gonna do it by yourself. CPAs, you know, in my case, I'm not there just to prepare a tax return. I'm there to have a relationship with a client and guide them. You know, it's I don't like to tell them, hey, this is what you're gonna owe on April 15th. We should be in conversation throughout the year and have an idea. Hey, this is where you stand. This is your cash flow. You know, you can save this amount for tax. You can use this amount for your growth. You know, and surround yourself with people that are smarter than you and better than you, because those are the ones that are gonna, you know, give you the best advice and you know, give you a positive outlook in life and in the professional world, you know. So definitely, I'd say those are the three things.
And then just out of curiosity too, you know, I've met a few. What would be, I guess, the main differences between a CPA and a bookkeeper? Because I know obviously some business owners will use bookkeepers. I would assume that you have more substance than a bookkeeper. Not obviously degrading, but I feel like they're. I guess I'll let you feel.
Yeah, so CPA is a certified licensed accountant. We're licensed by the state of Florida or wherever we are practicing, whichever state. Every state has their own different licensing requirements. Um, Usually bookkeepers or tax preparers are individuals for the most part that haven't gone through the training or the education that we have. I've gone to 5 years worth of school and education to get my license, and I'm required every 2 years to continue my CPEs to renew my license. So it's 80.
I just finished mine.
Yeah, it's like 80 CPEs. It's 80 hours worth of studying for, you know, that we need to do every 2 years. And so CPA main difference is we can represent the taxpayers in front of the IRS. Enrolled agents can do that as well, and we can sign off on financial statements. Individuals who are not licensed as CPAs cannot sign off on audited, reviewed, or compilations. We're the only ones that can do that.
Understood. Understood. All right. Obviously, one probably major topic. We just had the election happen last month. Coming into the new year, we have, you know, President-elect Trump coming in January 20th. You know, what's your you know, what's your plan, or how do you handle dealing with the new president coming in, and how often are those changes implemented, or, you know, how do those changes, because obviously, you know, Biden's policies are, you know, some may be different or some may be expiring.
Right.
So what's you know, how often do things change, and do you see any major changes coming up?
You know, we're all really anticipating this election because in 2018, when Trump came into office, he made a lot of changes to the tax law and created the flat tax for the C corps at 21%. He created the QBI deduction for the pass-through entities, and some of these laws that he put into place were to sunset. They weren't permanent. They were going to sunset in 2026. One major one was the lifetime tax credit for the estate tax, which prior to Trump it was about $5 million, and now, you know, it's, you know, over $12 million, and it was going to sunset. And a lot of people after COVID, you know, with real estate and business booming, a lot of people's net worth has increased significantly, and they are, you know, at the borderline of meeting these this lifetime tax credit limitation if it were to have gone back and sunset. I think with Trump, he's going to keep these and renew these tax provisions. So I don't see those changing, but I do think he's going to lower the C Corp flat tax from 21% to 15%. And that's going to entice a lot of, especially foreigners, to invest here in the U.S. and also U.S. investment. People are going to want to switch over to C Corp status to take benefit of the 15%. Sometimes that might work, sometimes it might not for some people here in the U.S., but it definitely will for foreigners because they have an advantage over us that we don't as domestic people. And I'll tell you. So you can, as a foreigner, one, I never advise them to buy real estate under their own name
Oh yeah.
because there's an estate tax exposure. We have, like the $12 million exclusion. Foreigners only have a $60,000 exclusion on their estate tax. So
Is this on their personal name or under an LLC?
right, under the personal name. So if they buy real estate, which a lot of people do, and they're not aware, and neither are the real estate brokers, they don't know all these tax laws. But if a foreigner buys it under their name, and unfortunately they pass away, and they have a $500,000 property here in the U.S., that property will now be subject to the estate tax, which can, based on graduated rates, it can go all the way up to 40% tax. So they should always buy property under an entity, especially under a C corp. I would usually advise them to do that. And the reason you want to do it under a C corp is one, if you were to pass away, that the family's not inheriting the real estate, they're inheriting the C corp stock. And the C corp stock shouldn't be owned by the foreign individual; it should be owned by a foreign entity. That way, you get away from the estate tax. Now, if you sell a piece of real estate, you're going to pay the 21% tax. Hopefully, they'll drop the rate down to 15, and that'll be even sweeter. But here's the best part. Now, when you're going to distribute the property, you liquidate the company, and when you distribute that cash, it's not subject to the dividend tax. We, as U.S. persons, pay the tax twice. We pay the income tax, and then we pay the dividend tax. So they're in a better position to own C Corp stock than we are, because they only pay, if they do a complete liquidation, they don't pay any dividend tax on that. It's all tax-free.
Oh, wow. Well, yeah, I mean, okay. So honestly, my next question coming up was for foreign, business owners, investors looking to come in the United States. Obviously you spoke a little bit about the real estate portion of it, just business wise. Are there any other things that they can take advantage of being foreign and using a CPA? And then what would be the worst case scenario if they weren't to use a CPA?
Look, their main advantage is when they sell intangible property like C Corp stock, or they liquidate the C Corp, or if they own stocks, like publicly traded stocks, and they sell. The dividends they make on those stocks, they pay tax on, and it's subject to the 30% withholding. But if they sell the stock and there's $100,000 gain, they don't pay any tax on that. So they have a huge advantage. However, they should never again own that stock under their personal name. They should probably hold it under, C Corp or something like that, because you don't want to fall into the estate tax trap. I think those are the two main advantages for them. It's always safer for them to invest in the U.S. Because South America and Europe, there's a lot of, with the wars, and in Europe, there's a lot of instability.
Of course. And then I guess another question, obviously AI is a huge topic. Do you see, or do you use, or do you foresee AI is coming into your industry? And I mean, I guess what's your take on AI and a CPA work?
Look, we're already seeing it with like QuickBooks Online or these QuickBooks programs. Before we had, 2 or 3 or 4 bookkeepers, and what their job was to input the monthly accounting into a client's books, right? Now it's you link the banks and you train the system, and all you got to do is download the transactions and make sure they're properly, booked. So it's taking away a lot of the time of inputting, right? So you can save 1 or 2 or 3 hours, which is great for the client, because, if we have a engagement based on time billing, right? We'll bill them based on the time incurred. They're saving money, right? So I do see that the technology is going towards us getting away from actually inputting the returns. And really where we're going to make our money is through the consulting. Is how do we plan, how do we structure a deal that we're going to save you money, right? And I always tell all my junior staff members that just come in, is like, you got to learn the foundation, and that's great, but think outside the box. Think how we can do things better, and kind of, give the client a good service by looking at it and seeing like, is there a planning opportunity here? And that's the way for us. I don't think AI has gone um, to that level where it's going to tell us, this is how you should do this transaction, because clients, it's all about emotion. Some clients don't want to give their kids their estate. Some clients don't want to, they don't mind paying, taxes. It's all about what the client wants, and you got to have that connection. And AI is not there yet to connect with a taxpayer and like, hey, this is really what you want. It's still a system of input and output.
Okay. And also, obviously, we're speaking a lot about real estate. How often have you worked, with loan officers, and I guess what's been your role when it comes to helping a client get to purchase a home? I guess what's some of the things that you've seen, and obviously, I deal with CPAs in regards to letters and P&Ls and things like that. Obviously, we have the bank statement loans and things,
Yeah.
but I guess what have you how experienced have you been in regards to clients buying homes?
Well, to your point about when should, people starting out work with a CPA, it's like you should start from the beginning, because if you plan on, hey, I want to buy a home, listen, buying a home is not it's like going to a car dealership and getting a car. It's a process, you gotta,
Sure.
you gotta get pre-qualified before you start looking at a home. You gotta understand what you can afford. But then if you're self-employed, you need 2 years worth of tax filings and historical activity for the bank to feel confident that you are a credit worthy applicant. And so one of the things is I always get calls. It's like, hey, can you sign this letter for me? And I'm like,
No way.
what, to say that I'm their CPA? I'm not their CPA. I don't have a historical. I don't know what they filed. I don't know this person. I'm not going to put my name out there for
Yeah.
somebody because I take the risk on. The minute I sign a letter and
That's
I
just
certify it, I'm taking the risk. And I don't care what money.
yeah. It's,
I do it for
gotta be
my
able to see.
clients. I don't do it for, and so build a relationship with a CPA because it's important. You're going to need it not only to prepare your taxes, you'll need it for credit, you'll need it for different things. And so it's always good to start from the beginning, surround yourself with good professionals, and plan.
Of course. And then I guess just kind of wrap things up. Obviously, you kind of gave your horror story a few minutes ago. What's a story that you have that I guess kind of opposites? It's a great story, a great ending. Obviously, the guy not going to jail is a pretty good story, but maybe someone that was in either got bad advice or whatever the case was, and you kind of
Yeah,
dug him out of a rut.
I mean, I have a lot of those. Look, to me, the best compliment is to get a referral from a client. Because you're like, hey, this guy took care of me. I had great experience. He was very attentive. He picks up the phone when I call him. It's like I'm honest. I'm like, hey, okay, you're calling me. I'll get back to you tomorrow because I have these things going on. But they know, or they feel that even though they know they have plenty of clients, at the time I'm speaking to them, they feel like they're my only client, right? And we've had a lot of great success stories. I would tell you one that we were able to do what's called a small stock. Basically, if you have a certain C corp and you own it for 5 years and you meet the certain criteria, when you sell that business, you can exclude up to $10 million. And I had a client who had a transaction, and it was a very interesting transaction because he originally didn't create it as a C corp. It was an LLC treated as a partnership. The election was made. We waited a few years because they knew they were going into this business to build it up and sell. And we did some research, and we actually were able to, meet them, make them qualify for this provision of the tax law. And they got a $10 million exclusion they'll never pay tax on. And then another one, big, I think one of my biggest success was I had a partner who has a client out of Mexico. They sell telephones, let's say, and they do high volumes, like 2 or 300 million a year. And but everything is everything's financed. It's all debt financed, how they run their operation. And then to top it off, a lot of their clients will pay them in 90 days or 120 days. So they're financing this operation, and there was a new law that came into place. It's called Section 163J, which limits the amount of interest you can take against taxable income or interest income. And because they had such a huge interest expense, but not that much taxable income because they were working on volume, they were disallowed the interest deduction, and they were having a huge $15 to $20 million tax bill. Okay, and they were ready to go for bankruptcy. And so sometimes it's not a tax problem. We got to look outside the box. And I helped this partner out. It was one of my partners in my other firm, and I looked at some of the rules for accounting, and I was able to show and convince the auditors, because there was another firm that's auditing their books, that really, because they were financing their clients' operations and giving them credit to pay 90 days to 120 days, part of that invoice should have included an interest component. So again, you can deduct interest expense against 30% of taxable income or 100% of interest income. So we were able to convert some of those invoices and reclassify a portion of that income to be interest income and offset 100% of the interest expense. And we solved their tax problem. That was a big one. That was a home run.
$15, $20 million bill,
yes,
something like that.
Yeah, it wasn't a client of mine, but it was one of my partners, and they felt a little stuck. And sometimes it's not just the tax issue. We got to understand the whole overall concept of the client's operation and really what's going on.
Wow, that's a big bill.
Yeah, that was
a good thing. But I think we'll finish up. always have one question that we ask. Obviously, being in Miami, with your cafecito after lunch, are you a croqueta person or an empanada person? I know you're Argentinian, so I don't know if there's another bias to that.
No, after a good coffee, a little cortadito or a little espresso, definitely a ham croqueta.
Croqueta, okay. Team croqueta with me.
Oh, yeah.
I always go back and forth. There's empanada, there's croqueta. I've gotten into arguments with friends about it, so it's something that we always like to ask.
No, empanada is like a nice little thing for lunchtime or a dinner, a little small dinner or something like that.
But just to wrap up, is there anything else you'd like to add or anything like that?
No, this is a great experience. Thank you for having me. I really enjoyed it. And, if anybody needs any tax or accounting advice or assistance, please think of me.
Of course. And just to wrap up, again, you heard all the laws, and that he knows a lot more than probably most people, and especially ChatGPT. He's been able to bail out a lot of people in the Cayman Islands, here, everywhere, foreign investors, business owners, homeowners, investors, all the above. So we'll put all your information in the bio below. So, if there's people that have any questions can reach out to you. I appreciate you for coming on. And thank you for listening. Hope you learned something, and look forward to the next one. Have a good one.